Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube push us to a high level of audience. Okay, in today's video I'm gonna show you something that is very rare. For past 1 week now I've not uploaded a content simply because I have no reason to actually create a content. I have no reason to actually shoot a video about financial industry because there is no problem to solve. There is nothing I'm going to solve. Like, before I shoot any single video, it is targeted at solving a problem. Okay, right now in the last 24 hours I have been thinking and I've been very meticulous and so bored and angry with what some people are passing through in the space of crypto industry. And what it is that we have about 9 billion people in the universe, and only 2 to 5% of these actually benefits from crypto space. And the reason is because the crypto market is volatile. Once the price has been stated at the initial coin offering, you discover that after a while the coin skyrocket and go to a very massive price, to a high price, and 90 to 95% of all coins actually pump and skyrocket to a high price. Only few will dump. Okay, so that 90 to 95% rises in price, which is where the profit lies and where the wealth lies, because the aim of launching an asset is for the asset to appreciate, which means the price will go higher than it will go lower. Okay, so we have to be on a positive slope than on a negative slope. And so a lot of people actually missed out on this. When BTC was below $1, many people actually missed out on it, and today it is very expensive. It is very hard to own one BTC. Okay, so I want to solve this problem. I feel like I need to shoot a video in order to solve this problem practically, not more of theory. Practically, I want to solve this problem. Okay, the level this video gonna help you to actually actualize what is said in this video is dependent on the level of the experience you have as the creator of this video, meaning that you really need to be discipled for you to get to that level. Okay, I don't want to waste much of the time. I have to go into this stuff. Okay, so we have a short document here: the H4 for direction and exit, M30 for entry. We need trend, zero differentials, liquidity sweep, or fakeouts for we to get the valid direction of the signal. Okay, so actually we just have a $1 in our trading account in our mt5, because this is not, we are not going to be actually trading the $1 on crypto exchange, but we'll be trading it in MetaTrader 5 Forex app. Yes, we'll be trading the BTC against United States dollars, and we'll be taking this $1 to infinite BTC. First of all, we take the $1 to 1 BTC and then grow the 1 BTC to infinity using a steady but a constant strategy, which I'm going to show in this video. But the truth is, this is not a financial advice. The extent to which you can actually actualize or put what you see here to success is dependent on your personal experience, which have to resonate with the experience of the creator. Okay, right now I'm going to go into the MT5 and start doing this. You need a trading account that actually give you high leverage. So either you use ENROLL or Deriv to trade this Bitcoin against United States dollar. Then if you don't have this account, you really need to check down the description of this video to create an account. Use the link. Don't use a fake link, just use the one stated. Don't just Google it, use the one stated, and you are ready to actually utilize what you are going to learn in this very video. The truth is, it is actually fundamentally hard to grow a $1 to infinite BTC, but I'm going to make it as much simple as I can so that you can actually know that anything is possible. I will not be trading live on this video, but I'm showing you the way, the method, the strategy that you can actually deploy. The truth is, if after you watch this video and you try to deploy these ideas and it's not working, or you reach certain stage and you collapse, what you really need to do is to become our VIP member, subscribe to our VIP member, because we actually drop signals across assets from forex to synthetic market in a single group. And so pretty much you need to actually be a member of you need to be a subscriber, and by doing so you will stop losing money. Okay, you will stop losing money. The thing is, we may not be sharing BTC USD signal all the time, but we'll be sharing signals on other assets most of the time, like volatility, boom and crash, ZAR USD, US30. We'll be sharing this, depending on the group, because there are categories. So if you are trading forex and synthetic, you'll be in a forex and synthetic group. If you are trading boom and crash, you'll be in a boom and crash group. If you are trading options, binary option, you'll be on options group. And then if you are trading gold and US30, gold and US30 are united or joined together, so you'll be in the gold US30 group. And so these are things you need to know. Okay, yeah, so I'm going deep into this video. Okay, right now this is BTC USD. This is BTC USD. Okay, now you'll be on the 4 hours time frame. You'll be on the 4 hours time frame, and then when you are on the 4 hours time frame, you have to set this to a line chart. You have to select a line chart, and then you have to study the direction of the, like, you have to check break of structure. Just break of structure is what you need to check break of structure first for you to know if market is trending in a given direction. It must break structure in those directions. So check break, mark the current break of structures as much as you can, mark the current break of structures as much as you can, mark, so you will now know that the break of structure is a turning point where the price, where the chart, the graph representing the price movement break out, where it cross and break, like where it break out, like you see these are turning point and price break out of it. So it shows that the market is trending to the upside, so you should only buy, not sell. You should only buy, not what, sell. Now you have to define what an up direction means. An up direction is a direction whose slope is positive. So if the market is going vertically, it is up. If it is going like this, so long the angle is between 0 and 90 degrees, okay, then the market is sloping upwards. But if the market is breaking level to the downside, okay, on this H4, if it is majorly breaking level to the downside, then it is sloping negatively, or the angle is between 0 and minus 90 degrees, and the market is sloping negatively. Okay, so it can be moving downwards vertically, or it can be moving like this, but not like this, because the market can go backwards. So it will be between 0 and minus 90 degrees. Okay, so that's cool. When you get this idea, you have known the direction of the market. So the next thing you need is to study the output behavior of the market after they break structure. Study the output behavior of the market after this break structure. Now when they break structure, actually it is called an output signal. So when the market breaks structure, it has created an output. which will give you opportunity to enter that market, right? But you cannot just enter this market when there is output. You need to go back to candlestick at lower time frame and be able to enter the market. So you go to 30 minutes time frame, you will see what I have marked the broken level, right? So when you come to this time frame, don't be afraid of entering late or entering early. Don't be afraid, don't put fear, only obey the instruction. And the instruction is try to localize a key level, like localize zero differential level, where the price cannot break further. The price cannot break it further. The market cannot go against it. Like this market is trying to go in the opposite direction to your direction. So we want to go up, but check where the market is going downwards, and as it is going downwards, it loses energy. It stops going downwards. The rate of change of price becomes zero, and that is critical level. And so right here, you mark this level. Just 1 point is okay for you to mark this level. So what you need, just 1 point, you mark this level. So you wait for price to tap into this level, no matter how long it takes. So long price is coming to tap into this level. If the distance between the current price and this level is so close to zero, you can enter the trade. Then I will show you how to get your lot size. So you are entering this market, and then you are considering the width of this zone, because when you are drawing this zone, you are looking at the wicks in the vicinity and using it to model the length, the width, or the height of this zone. Okay, so when price tap here, you are going to measure this height, and this is around 383 pips, and then you are going to divide it, get 50% of this height, and then where you enter the market from, like outside this, the counter side of this zone, that is side that is against your direction, we are going to place on that boundary, and then you measure the 50% of that zone width, which is around 190. So you measure 50% is around 190. So you are going to place your SL here. Why I did this is for liquidity sweep. Okay, the market might draw down a little bit and start going in your direction. So you put your SL here, and then you are now immediately you place that trade, and then why are we calculate where? How do you now know your lot size? When you enter the market anywhere here, and then you localize your SL somewhere here, that means let's assume you enter here, then your SL is somewhere here. Okay, so you are risking around 900 pips. Okay, you are risking around 900 pips because you have included liquidity sweep, so you are risking around 900 pips. So what you do is you are going to divide $1 with 900 pips to get your lot size. But in a situation where you divide $1 with 900 pips and you couldn't get your lot size, you have to note down the nearest stop loss pip that you are going to use to divide your $1 in order to get the lot size. So when you get that, you are going to place that trade. But the general rule of thumb is fund something like $10, and then risk $1 on that $10. And when the market start going in profit, you are going to remove the $10 so that you will be running with $1, and that is how it should be. Okay. Now, when the trade is running, you go to 4-hour time frame, and then on a line chart, remember, we enter this market somewhere, we made our decision somewhere here, and then we are going to be monitoring the output behavior of this line chart. That is when it creates a retracement and breakout of it, So if it creates a retracement and fail to break out of it, instead start going in the opposite direction like what happened here, you are going to take your profit, you are going to close the trade. So if you had, let's assume you use 0.01 and enter this market here and then take your profit here, you have made $77. Now that you have made $77, the next trade, you wait for break of structure, and then so we are going to mark this thing black. Okay, I'm going to show you how this thing is going to work. We're going to mark this in black. Okay, now price break here, then you go to 30 minutes time frame. When you go to 30 minutes time frame, you go to candlestick, then you shake where the breakout happen. Okay, it happened here. So you look for nearest support there where price is coming down, but it can't continue going down, which is here. And then you wait for market, no matter how it has went up, you wait for market to come and tap here. Then you enter this market here. Okay, you enter this market here. This time around, you are going to risk $1 plus $7, and then this is where the magic will start. Okay, I will take you to calculator and show you. The magic is going to start, and we are going to assume right here you are going to risk a minimal stop loss pips. And so here you are having $78, and then you are going to divide this $78 with around 200 points. So you are going to risk 200 pips. Okay, so you are going to use the losses of 0.39. Now when you use the losses of 0.39, you place this trade. Now when you place this trade here, you go back to 4-hour time frame and you monitor the output characteristics. So the market keep outputting signal until it reaches here and stop outputting signal and it changes direction. Now when you change direction, what do? You see that here we enter here, and then we're able to generate on changing direction, we're able to generate almost 5,000 pips. Now when you risk 5,000 pips, when you risk 200 pips to get 5,000 pips, your risk reward is 25. So 25 is going to multiply 78. Okay, and your return on investment will now be this. So you have, on overall, your portfolio has went from $1 to $1,975. So $1,975 is the next trading account you are going to use. Now this account, if you are following this zero differential trend zero differential and liquidity sweep strategy, the next thing that will happen on this account is that you might generate a signal that will go by 10,000 pips, okay, on a break of structure by 10,000 pips, and then you are going to risk, let's say 10,000 pips, you are risking 300 pips. So the risk reward is 33. So this 33, if you add the return on investment, it will be 34. Now this start, if you convert it to return on investment, it will be 34. The 34 is going to multiply 1975, and now you will be up to almost 1 BTC, because that was the time BTC was around this price. So you will be almost close to 1 BTC. Now when you reach this number, you are now going to, because Esnes will allow you to use unlimited leverage. Make sure you check down the description of this video and use Esnes to practice this. And so you are now on your way to infinite BTC. Once you have your 1 BTC and you deploy this strategy, because this is an infinity strategy, because it is basically risking nothing to gain infinity. Yes, even though we actually practically risk something, but theoretically it is nothing. It is called zero infinity trading strategy. And so try to understand this. This is not a financial advice. You might be trying to replicate this thing, and you will fail up to 5 years, up to 10 years. You will not be able to actually put this thing to use. Yes, but somebody that actually have the same resonant frequency as someone that is creating this content will be able to do the same. And that's why you need to subscribe to our VIP's channels, and you have to become our mentees and enroll for our mentorship. I have to enroll for our courses. Courses is different from mentorship. Courses short term, mentorship long term, and they have different advantages. So thank you. Make sure you keep coming to WINFXTRADING. Bye for now.